trading. What causes the fluctuation of exchange rates between two currencies? Why does the price has to go up at some point in time, come down, or keep on fluctuating within a range? The answer is demand and supply. Just like every other market, the prices of these commodities are controlled by the laws of demand and supply. And today we are going to look at demand and supply in forex trading and how we can make use of it to earn money. Our goals as traders is to identify the demand zones and the supply zones so as to buy at the demand zones and sell at the supply zones. Our intention is that when we buy at the demand zones, we expect the price to appreciate in value, and once it appreciates, we'll be able to sell what we bought at cheaper price now at higher price and make money from the market. The good thing about trading the forex market is that you can buy and make money when the price appreciates, and as well you can sell and make money when the price depreciates. What is demand zones in forex trading? Demand zones are simply buying zones, while supply zones are selling zones. Our goal as forex traders is to identify and buy the exchange rate between two currency pairs when the price is low and sell when the price gets higher. Before we dive deep, let's look at these three concepts. At various points in time, you will observe the market either going up, coming down, or moving in a range. Now, when the market is going up, we would say that the market is bullish. When it is coming down, we refer it to bearish. And when the market is moving sideways, we refer it to be in a range. In demand and supply, we use different terms. When the market is bullish, we refer the move up as rally. When the market goes down, we refer the move as drop. And when market is in a range or consolidating, we refer the move as base. Now we've understood the concept of rally, the concept of drop, and the concept of base in demand and supply. Let's look at the word demand zone. In forex trading, demand zone simply means buying zones, while supply zone simply means selling zones. There are two types of demand zones. One, when you encounter a market makes a move, rally, and makes a move, base, and makes another move, rally, we refer to this as rally, base, rally. We term this zone, which is the base, as these demand zones. This demand zone is actually the decision point. Now, we expect that as traders, once you locate these demand zones, what are you looking out for again? You are looking out for when the price will drop down to that zone so that you initiate your buy order. Remember, I said that demand zones and buying zones. So whenever market comes back to that demand zone, which is the base of this rally, base, rally, we initiate our buy order and expect this market to go up. The second type of demand zone is drop, base, rally. This is drop, this is base in a range, and this is rally. This is drop, this is base, which is in a range, and this is rally. Now remember, I said that the decision point here is the base, or the demand zone is the base. What we're expecting as traders, so far we have identified the demand zone, and we say that the demand zones are the buying zone. Our work is to come and wait for the market to retrace at that demand zone so that we initiate our buy order and expect to make money as the market moves in our direction. Let's look at the supply zones. Also, there are two types of supply zones, which, as we defined earlier, that supply zone simply means the selling zones. So what it entails is that whenever a market presents a supply zone, our work as traders is to come and wait for that market, that whenever it gets back to that zone of the base of that supply zone, we're able to initiate our sell orders. Types of supply zones. Number one is drop, base, drop. When the market makes a drop and presents a base and makes another drop, we tend to mark out this base and term it our supply zone. Now we'll have this drop, base, drop. So our work as traders is to wait for a retracement of the price to that supply zone, which is the base, so that we initiate our sell order. We initiate our sell order in order to make money in the markets. The second type of supply zone is rally, base, drop. Whenever market makes a rally, a base, and a drop, our work is to come and wait for the market to make a retracement to that supply zone, so that we initiate our sell order at that zone and make money with the market. How does the market present these demand zones? Oftentimes, you will not always spot this consolidation in a ranging zone at the base, like this, and this. You always see these demand and supply zones as engulfing candlestick patterns. Whenever you spot an engulfing candlestick pattern, you just know that it is a base. For example, you experience that these are sets of bullish candle, one bearish candle engulfed by another bullish candle, and the move continues. This simply made a rally base rally move. I will refer this as rally base, this zone, which is here, and this is rally. So as traders, we have identified this engulfing, and we are simply waiting for when a market is going to make a move to the retracement to that zone down, so that we will be able to initiate our buy here and expect to make money in the market. Secondly, you can see this move down. So I represented this color with sets of bearish candles, and you see that this is a drop and this is a base, which is engulfing, meaning that this candle engulfed this previous candle, and we call here a base, and this is what? A rally. So this is a drop base rally, which, as I stated, drop base rally is a demand zone. Our work as traders is to wait for the market to retrace to that our demand zone, so that we initiate our buy orders, so as to make money when the market continues in that move. So that is how these demand zones appear in the charts. The same thing is applicable to the supply zones. Market made a drop, base, and drop. Our work as traders is to wait for a retracement of this market up to this supply zone, so that we can initiate our sell order and make money as the market continues in that direction down. Here, market made a rally, base, and a drop. Our work as traders is to identify this particular base, which is the engulfing candle, and wait for a market to retrace back to that supply zone, so as to initiate our sell order in order to make money from the market as it continues in that direction.
Now, next video we'll be looking at how to build a trading edge or a trading strategy using these demand and supply zones.
Thanks for watching. You can click on the like buttons and share it with your friends so that they will learn with you. You can as well subscribe so that you get other educational videos like this.